Hi everybody, today I'm going to be doing a trade review and a market analysis. So I'm basically just going to teach you guys about why I took the trades I took. I'm going to show you guys what trades I took, and I'm going to teach you a little bit about my strategy, right? So let's get into it. So let's start by looking at the zones I have marked out, right? Why do I mark out these zones? I mark out these zones because they are opens, closes, highs, and lows of sessions, right? Mainly opens, highs, and lows. Why do I mark out these sessions? Because these are areas of high liquidity. As I talked about in the previous video or in some of the lessons, liquidity is an area where there's lots of orders stacked up, right? So when banks and when big institutions are buying and selling in the market, they're placing big orders, right? 10 million, 20 million, sometimes even 100 million. So they need to be able to execute these orders. And in order to execute these orders, they need volume, right? They need people trading. So I like to look at these spots, look at these areas on the chart where there's going to be high liquidity so I can trade with the banks, I can trade with the movement of the market, not against it. Right, guys? So let's look at how this works, right? So this was the London high, right? The London high. So basically you're going to hear me talk about three main sessions. Asia, London, and New York, right? So Asia is in red, London is in yellow, New York is in blue, right? So these are different parts of the world where different people are trading in different sessions, right? Like the US market open has a certain time, Asia market open has a certain time, and London has a certain time because as you guys know, the world has different time zones, right? So this is London, right? So let's look at the London high. So you can see right here, the London high was you could have took some shorts right here, right? You could have gotten to a short position off of this little rejection, right? People often ask me like, why, how do you know that it's going to react? You can see we didn't hard close above this, right? A hard close is a full candle confirmation close, right? So this would have been a hard close. We hard closed above here, right? And this would have been a real hard close because it's two candle confirmations. But you could have took a little bit of a buy position right here, but we didn't really hard close above this at all, right? So you could have took a short position right here and then wrote that down, right? So that's one way you could play that, right? So now let's go ahead and let's look at the trades I took today. All right, guys. So this is the 1 minute time frame. You're gonna be like, why is he trading on the 1 minute? I'm not trading on the 1 minute time frame. I'm just showing you guys the 1 minute time frame so you can see exactly why I entered and when I entered, right, guys? So that's why I'm looking at the 1 minute time frame. So you can see right here that we approached a previous low, right? We approached a previous London low, and I took a short position. I took two trades today, one winner and one small loser, right? Yes, I lose, right? So that's why I'm being fully transparent with you guys and showing you guys that I had a nice winner and I had a very small loser. My winning trade was like this. My losing trade was like this, right? So I actually sent out all of these levels before they happened to my premium group. I have a premium group. I share with them the trades I take. I share with them my game plan. We share with them alerts, right? So we kind of let them know exactly what we're doing. So I sent out this game plan to my premium group, and they saw all of this. But so we're going to look at why I took this trade, right? So this was a previous low, as you guys now saw, previous low of the London session. And I saw that price was making a downtrend, right? So a downtrend is lower lows, right? Lower lows and higher highs, right? So we approached a small higher high. So I expected it to continue the downtrend and make a lower low, right? It did, right? So I caught a little bit of this move, and you can see that we didn't hard close above this, right? So if we would have like came down and close like above here, I wouldn't have took that trade because that's going to show that we're going to bounce. But we're rejecting this zone heavily. So I didn't take the trade off this candle because we still could have bounced. I waited until this candle, which was the hard close, right? And then I took this little short, and I missed out on a lot of this move. Right, like I'm just gonna tell you guys right now, I missed out on a lot of this move. I still made money though, so that's why I'm happy, right? So I caught like around 15 points. This move like ended up being around probably around 20 points, even more than that, like 30 points. So I missed out on a lot of the move, right? But I'm not trying to catch every single move. I'm trying to take trades where my setups present themselves, and my setup presented itself, right? So that's exactly why I took that trade because I saw a setup and I liked the setup. So I took the trade based off the setup presenting itself, right? So very nice trade. And I targeted this next liquidity zone, right? This, as you guys can see, this was also a liquidity zone right here. This was a previous low of the New York session. So I targeted that and it played out, right? Nice little trade. So let's go down back to the 1 minute so you guys can see all this. So we were bouncing a little bit here. So I wanted to make some more profits, right? So I took another short based off of this hard close. And I actually would have made the trade, right? Like the trade would have worked out, but I actually got stopped out like right here. So it was just unlucky, right, guys? Like the trade played out just a little bit later. So I lost like $150, just a few $100, like nothing more than $200, probably around 180 because of commission, right? So lost $100, made around, I think this trade was around $7,200, right? So as you guys can see, big wins, small losses. That's the name of the game, right? So my losses are often boring, right? Like sometimes I'll have a sizable loss, but my losses are often very boring, which is a very good sign because you want your losses to be boring, in and out, bam. So I took this trade, hit my stop loss, right? Ended up playing out, which is kind of annoying. I just got in a little early, right? So I was just like, bam, out, right? Like a robot, right? In and out. And people often ask me, like, how do you not get emotional? I don't get emotional for two reasons. One is because I know how to control my emotions, and two, I know how my emotions react to certain scenarios playing out because I've been doing this for so long, right? So when I see this happening, when I see that I got stopped out in the past, I'd be like, oh no, I'm just going to stay and I'm going to put my stop loss up. But I didn't. I got out. So I was in and out, bam, boring like a robot, right? So not that exciting, right? It's not like, oh, I had some giant loss. Now I'm crying. No, you know what I mean? Just I'm very systematic with this stuff, guys. So I tell myself if I take a loss, right, I'm out, right? So I hit my stop loss, I got out, right? So price is currently kind of in this very choppy zone, right? We had most of the volume was around here, right, guys? We had some decent volume coming here, but right now we're just kind of chopping around. We might send out some more alerts to the premium, but we're just gonna see what price does, right? I often tell people trading is almost like hunting, right? When you're hunting or when you're fishing, you wait for the opportunity to come to you, right? You wait for the opportunity, and when you see the opportunity, bam, you execute, right? So I saw this opportunity right here. I saw that we hard closed under this previous low on a smaller time frame, so I took the trade. Bam, opportunity presented itself. We also hard closed here. I took the trade. Opportunity didn't really play out how I wanted it to, but it still presented itself, and eventually it did play out. I had a really tight stop loss because I was trying to make sure I didn't give back any of my profits, and I gave back like a little bit, gave back $100, $200, but that's not important, guys. What's important is that you have risk management, right? So I'm only risking a small part of my account, and I have a nice risk to reward on this trade. Great risk to reward. You guys can see it's a 1 to 5, right? 4.97. So I risked around $3 to $5. Like I risked more than that, but that's like how much I risked per the move, right? So like realistically, I was risking probably around 1 to 2 grand, right? 2 grand, right? Probably 2 grand, and then I made 7,000, right? I made 7,000, so probably like $1,200. But 1 to 5 risk to reward, right? So that means for every $100 I put in, I make $500. For every $1,000 I put in, I make $5,000, right? So whatever $7,200 divided by 5 is how much I risked. So I risked a little bit, and if I lost, I would have lost, 2 grand. But I didn't. I won, and I made, or no, I'm sorry, I keep saying 2 grand. It'd be around $1,200 exactly, right? Be like between $1,200 and $13 is how much I risked to make $7,000. So I think that's really good, right? Because I like to risk a little bit, make a lot of, right? Yeah, it'd be $1,200. So on this trade, right? Same thing. This was a little bit of a smaller risk reward, a 1 to 3, but I got stopped out, right? I could have put my stop losses like up here, but then I would not have had a good risk to reward ratio, right? So that wouldn't have been an ideal setup. So I like looking at these kind of things, guys, because I like showing you guys these things too, because it shows you how I trade and why I trade, right? Like I don't just try to force trades. I take trades when my setup presents itself, because then I'm gonna have emotional discipline, right? Where my edge presents itself, when I expect a trend to continue or not continue, when I see a zone of liquidity having a strong reaction, right? That's my edge, right? My edge is zones of liquidity and trends. So I know when opportunity presents itself, I know when I see something I like, and that's what I take trades based off of. I don't just force trades. I make sure that setup is coming to me, right? And then when the setup comes to me, bam, I take the trade, right? So simple as that. And there's two main things you want to focus on when you're trading. You want to focus on psychological edge, right, which is your mind, and statistical edge, right? Statistical edge is your strategy, right? It's when certain conditions present themselves in the market, are you going to take a trade? And I did. And psychological edge is making sure that your emotional state is good, because some of you get into trades and you're very emotional, like, oh, it's going up, oh no, it's going down. And I was like this when I first started, because I didn't understand that you have to manage your risk, right? You have to manage your risk, and you have to practice risk to reward, right, guys? So that's just a little something I want to leave you guys with today is psychological edge, right? So how's your mind working? And then statistical edge, right? So how's your strategy working? So mindset and strategy are kind of the two building blocks. You have mindset, you have strategy, bring them together, you have a great trader, right? So some people have a great strategy, right? But their mindset is off. So even if the opportunity presents itself, they're not going to take it because their mind is all, I'm down, I'm up, right? So we can teach that through risk management, through risk to reward, through developing a proper strategy. And some people, they have a good mindset, right? Like they're all positive, but they don't know the strategy, right? They have a good mindset. Maybe they're an athlete, or maybe they're somebody who works out, or they're very disciplined, right? Disciplined person. Maybe they have a job that requires them to be disciplined, so they're already disciplined, but they don't have a strategy, right? So you need both. You need a great strategy and you need a great mind, and you bring them together, you have a great trader, right? So psychological edge and statistical edge, and that is how I use my psychological edge to identify that this trade was playing out, and I would have got out right here. If this trade went up here, I would have got out, right? It didn't. Played out. Psychological edge, right? Strategic edge is that hard close below this zone of liquidity, right? We were continuing the trend as I showed you, so that's how it played out. That right here, my psychological edge presented itself, right? So I had a good mindset. I got out right when I told myself I was going to get out, but my strategy was just a little bit off. I was just a little bit late on this, right? So like, whoops, let me move this and move back up here. But so basically, I got stopped out right here. It's like trading views normal. I got stopped out like right here, this candle right here. came up, stopped me out, right? And it happens, guys. It happens, right? Like little loss doesn't really matter because I was still up overall for the day, right? So that is the trading breakdown. This is March 15th, Friday, March 15th. That's my trading breakdown of why I entered the trade, how I entered the trade. And I gave you guys just a little bit of value, just a little something to leave you with for the weekend, right? So psychological edge, statistical edge. We're going to be doing one of these every single day, right? Just to look at the charts. Even if I don't take a trade, we're just going to look at the charts. We're just going to kind of analyze what happened, right? But that's it, guys. That's it, right? That's just my little market review. That's my little trading review. And I hope everybody has a great weekend, and I'll talk to you all soon.